everybody. Welcome to our Thursday Q&A session, where we get to spend some time with the analysts who analyze these companies for us. Today we're going to be talking about Harmony Gold. Manus was with us last week when we spoke about Sibanye. It wasn't looking too good, but hopefully better news today. We're going to be chatting about Harmony, and then Sean's going to do the technical bit for us, and then we'll open the floor for questions and answers. You're welcome to type your answers in the chat box as Manus progresses through his presentation, or you can ask them outright if you want to afterwards. It'll be nice to put a face to the voice, so please switch on your camera when you do ask that question. I'm going to hand straight over to Manus. Manus, thank you very much.
Thanks, Otto. Welcome, everyone. Let's dive into it immediately. So, as a bit of an executive summary, we'll have a look at the macro environment, what the gold price did over the last few weeks or years, who is buying, the gold industry, the gold miners' relative performance to each other, the all-in sustainable cost of the miners. We'll quickly have a look at the financials of Harmony. So they released an operational update about a month ago, and then this morning a trading statement. Then we'll also have a look at consensus. We'll also quickly check the intrinsic value of Harmony, and the recommendation currently changed from a sell to a hold. So gold price, the performance, you'd see that about between 2020 and mid-2023, the gold price consolidated and stayed within a band, and then it took off. For 2024, the gold price was up about 27%. Year to date, it's up 10%. And then over a rolling 12-month period, the gold price has increased roughly 42%. I think on this chart, Sean can correct me later if he wants, but that dotted line is a 200-day moving average line. I think as long as it stays above that, it remains in a kind of a bullish trend. And that currently is sitting just below the $2,600 mark. So down to that level, I would still consider the gold price pretty bullish. So if we have a look at the gold price versus the dollar index, you'd see that's kind of a disconnect. It's usually negatively correlated. So a weaker dollar index, a stronger gold price. You'd see there between 2010 and 2011, the dollar index decreased in price or in value, and then you'd see the gold price increasing. That's more or less what used to be the case. It looks like it's disconnected at the moment. You'd see since 2024, both have increased in price. Both is up in 2024. So there's clearly a bit of demand on the gold side. So the gold price drivers, you'd see in between 2022 to 2024, that light purple color is central banks buying. That's increased quite a bit. It's more than it's been since 2010. And then if you have a look at the investment case, there's still a bit of investment. That's the dark green color. If you have a look back to around 2016, that used to be a bit more. So that's declined, but there's still good demand. And then darker purple color, that's jewelry demand. That's declined. If you have a look at the likes of 2013, it's decreased slightly, but that you'd expect with the gold price increasing, just becomes a bit more unaffordable. If we have a look at the gold, SA gold producers, that's your blue, and the global gold producers, that's gray and black. You'd see that Harmony Gold is outperforming. It's done the best, with Anglo Gold around mid, and then Gold Fields is the low performer or the worst performer, but it's still up quite a bit from the SA side. But relative to the international global gold producers, still doing very well. On a peer comparison basis, you'll see the all-in sustainable cost of Harmony Gold used to be quite higher than for instance Gold Fields, and more or less aligned with Anglo Gold. They've actually managed to decrease their cost over the past year, which is completely the opposite of all miners. You see that the platinum producers and the gold producers have experienced quite a bit of inflation over the last year. So that's why you'd see that Gold Fields jumped quite a bit on their cost to operate, and the same on Anglo Ashanti's side. From a geographical point of view, in terms of revenue, Harmony Gold's got the highest revenue exposure to South Africa. About 90% of their revenue comes from South Africa, while Gold Fields is only about 10%, and Anglo Gold's got no SA gold operations anymore. I think that's a big reason why Harmony's outperformed a bit. They get the rand exposure as well. So weaker rand means they get a higher price for their dollars, or a better price for their dollars. They get more dollars when they sell their gold, and that's why they've done pretty well as over the last few years as well. So it's a great rand weakness hedge if you buy Harmony, for instance. If you have a look at the financial data, so they released a production update about a month ago, and then a trading statement this morning. The average gold price that they received increased 28% in dollar terms. In rand terms, it's actually declined. It's up 23%. Sorry, it's not declined. It's up 23%, but it's lower than they've received in dollar terms. That's due to the rand slightly being stronger. And then the earnings per share expected is to increase between 24 and 42%, while the gold production is expected to be between 790,000 ounces to 805,000 ounces. Underground recoverable grades, so grades that they've mined or gold that they got from their mining operations, is about 5.8 grams per ton. That's also their guidance. It is slightly higher than their guidance, but it's expected to be around that level still for the full year. And then the all-in sustainable cost for them is currently lower at of their guidance. It's 960,000 rand per kilogram to 985,000 rand per kilogram. They expect that to be just over the million mark for the full year. They are releasing the half-year full results next week, the 4th of March. And then consensus for the full year, so that's ending in June, is revenue to rise by 16.5%, and then earnings per share is expected to rise by 44%. So we'll see if that changes with their full year, half-year results next week. And yeah, guidance, so still production around 1.4 million ounces to 1.5 million ounces. And then capex to be around 10.8 billion rand. If we look at the valuation of Harmony, there's a bear case that's got a probability of 15%. That's just simply a bit of a dollar, US dollar price for gold, maybe staying to that the first chart showed in a band for the next few years. That happens a lot of time after it's got a run. For 2 years, it might just stay a bit of a consolidation. And then a bull case, which takes in consideration a further significant run this year, of 15% probability, and then midpoint more or less expecting where it is with a slight growth of 70% probability. That brings the share price value to 195 rand and 80 cents. I know Harmony dipped below that level this morning. I think it's around 192 rand per share. So that's got slight upside, but when I did the valuation, it had a bit of a downside. That brings me to an end to my presentation. I'll give over to Sean for technical analysis.
Yeah, thanks, Marnus. Great presentation. Yeah, you can see the chart there of Harmony. Obviously, again, it's the close until yesterday. So at this point in time, when we saw this on the chart, it's trading below its 20-day moving average, but it's still above its 50-day and 200-day moving averages. So both the medium and the long-term trends remain bullish. Saying that, you can also see that the trend has basically been sideways for a few months also. In the short term, the share price, as you can see there, yesterday broke down below that support trend line. A bit of a bearish change in trend there. And that has extended its losses today. As Marnus said, the last I saw, it was trading at 191. So it's nearly down, 3.29%. So basically, I'm anticipating that the share price it will be trading in that, call it the support resistance zone between 204 and about 187. And as Mona said now also, yeah, the share price is trading below that intrinsic value. But you can also see there at the bottom, the MACD indicator is trading in overbought territory, or just in overbought territory. And also trading just below its trigger line, which is bearish. So hopefully this, as I say, that will resistance support zone will hold. Other shorter term technical oscillators are already very oversold. Again, as I say, hopefully to hold at these levels. The worst case scenario drops out of that zone, and I think maybe it could pull back all the way down to 150. But I don't think, I think that's a small probability. Yeah, and that's how I see it.
Thank you, Sean. Yeah, there is a small probability, but I mean, if you're looking at it purely from a technical point of view, it has broken that upward support line. It is quite a significant pullback from the high made at about 230. It is back into the sideways channel, albeit just above maybe the real one, minus bear case and the bottom of that channel coinciding. So yeah, not much to read in the technicals here, except that it's on the back of a very bullish trade statement and expected results that seem to be positive. We're seeing the share price come back from a very hard rally, and something to keep an eye on. I mean, if those results come out in line with expectations next week, the share could bounce back a little bit, but I think this resistance level may hold here, because it's now broken a trend line, it's broken the moving average, it's broken the resistance line, and it really looks like Mana said, if the gold price doesn't keep on running, and that's how he based his valuation on, if the gold price doesn't keep running and sort of stagnates around this level, then the upside for the company becomes slightly more limited. Let's hop over to the chat and see if we can get some questions from the audience. I've got nothing yet. There's nothing yet. So Manas, you said they are the cheapest as far as costs concerned to produce an ounce of gold.
Yeah.
1,600.
Yeah.
Okay, and then I can't recall. Can you remember what you said Sibanye paid for an ounce of gold last week?
It's expensive. It's about $2,200, $2,300 an ounce. Yeah, they're quite expensive.
So if you wanted a gold counter, then quite a bit. I mean, it's far better to own this from a profitability perspective than to buy something or own something like Sibanye.
Yeah, Sibanye, you've got your operational risk on the PGM side. You're mixing two things, and at the moment it's not, it's saving them, gold saving them the operations, but it's not looking great on their side. I think the stock since they released is down about 8 or 9% last week.
I didn't check that exact number, yes, but it is down quite a bit. I see Ger's got a question here. He says the dividend yield on Harmony is only 1.2%, which is far lower than the current interest rates. Doesn't that make the share too expensive?
No. So, sorry, can I answer that one?
Yeah, of course. Please.
Okay, cool. So for these miners, it's quite interesting. A lot of companies, if they start paying out dividends rather than investing back in the business, it's more of a concern than anything else. Depending on what the stock is, a REIT pays out, they've got to pay out, they've got rules. But for mining companies, you'd expect them rather to use their cash flow for capex and invest back into mining and keep the business operating for longer. That's not to say a 4% dividend is saying something, but the share price also runs a lot. So that dividend yield will be lower, and because of the gold price that they can earn, they can expand the operations a bit more, increase production, and hopefully increase share price in that way. So I hope that answers that question.
Okay, so they opt for growth instead of paying out money. They opt to
Correct.
spend on capital expenditure rather than paying out to shareholders, and the shareholders benefit from the run in the price.
Correct.
Of the share price obviously running on the back of the amount of gold that's produced, the cost of the gold that's produced, and the gold price as variables. Okay, I see Richard says, Harmony, do they mine platinum?
No. They just
Gold only.
mine gold, and if I remember correct, slightly bit of copper, but that's it. It's not a lot. It's gold.
Okay. Any other questions, guys? I don't see any other questions, so we'll also give opportunity for somebody to type a question quickly. If they have one, I just want to remind you, I sent to most of this audience, I sent an invite to tomorrow's questions and answers session that we host on the fund side of things. And it's typically quite an interesting discussion because we talk slightly about macro factors and we talk about funds that are being constructed by professional managers. And tomorrow we have Dr. Adrian Past, who's the Chief Investment Officer of PSG Wealth. We've got Lyle Sankar from PSG Asset Management on the panel. So it'll be a nice discussion, and we're going to be talking specifically about the PSG Investment Management Cautious Fund. So if you want to learn about fund construction and portfolio construction in general and how these guys think about picking assets for their funds, then join us tomorrow. It's not on Teams, it's on a different platform. And if you missed the invite, just pop me a mail at sarl.snowman@PSG, and I'll gladly send you an invite to tomorrow's discussion. It'll also be recorded, and you can also watch the recording in your own time, as we'll share that link with you via email again. So important to register for that. Gers got another interesting question here, Manus. He says, what's the expected remaining life of Harmony's current mines?
Yeah, so that's quite specific to the mine, and what's usually nice to do a bit of a calc to see in terms of operations where they mine, what percentage of each mine revenue from each mine would then get to a point where you'd say what's the life of mine on a breakdown basis. So in total, but I hope I'm getting this point correct, but to check overall what the life of mine would be. So it depends on very much which mine you're looking at, but it's on average, I would say, around 30 to 40 years. There are mines with more life of mine periods, but then also some mines of them that are older is slightly lower.
Thank you, Manus. So we can't put a date on it to say by 2050 they won't be able to mine anymore.
No. But the thing is also that's where CapEx comes in, where you'd like to expand now, and your cost to operate a new section of the mine might be 2,000 ounces dollars per ounce. But then now you can do it because the dollar price you receive is so much higher, so you can expand. That's what they'll be looking at.
Okay. That says thank you. I don't see any other questions. In that case, I'm going to close the meeting. Guys, we'll be back next week, Thursday. We were chatting to Pierre. We're back on the banks. I think it's First Rand next week, and then Aspen, and then I think MTN after that. So First Rand with Pierre next week. We're looking forward to that. Marnus, thank you very much for sharing with us your knowledge about platinum and gold mines over the last 2 weeks. We look forward to hosting you again, and thanks to everybody for joining us. Pierre's saying Sasol. Pierre, have I got the thing wrong? Is it Sasol first and then First Rand?
Yes, that's it.
Oh my goodness. Okay, don't listen to me. Pierre is probably right. It's Sasol next week, but same place, same time. Thanks for joining us, and thanks for sharing your insights, guys. Thanks. Have a good Thursday. Ciao.